Good afternoon, everyone. Welcome to Qisda Corporation Investor Conference, the fourth quarter result of 2023. This conference will be chaired by Chairman Peter Chen and President Joe Huang and CFO Jasmine Hong. Also co-chaired by GM of each business group. GM of Information Technology Business Group, Daniel Xue. GM of Commercial and Industrial Business Group, Yuqing Lin. GM of Medical Business Group, Harry Yang. GM of Business Solution Business Group, Michael Lee. GM of Networking and Communication Business Group, April Huang. And our CIO, Michael Wang. This conference is estimated to take 1 hour. Agenda is as follows. First, CFO Jasmine Hong would give us the fourth quarter financial results and highlights. And Peter Chen, our chairman, and our president Joe Huang to bring us business update and outlook, followed by GM of each business group to give us a briefing. Later, we will enter a Q&A session. You can submit your question in the Q&A box. We will collect those questions and answer them later in this conference. Before we commence, we would like to remind you in our presentation that would contain forward-looking statement and would subject to risk uncertainty. Please spend some time to read through slide 4, Safe Harbor Notice. Thank you very much. Next, we will hand over the microphone to Jasmine, our CFO, to give us the financial results of the fourth quarter of 2023. Good afternoon, investors. I am CFO of Qisda Group. First, I will give a brief introduction of Qisda Group and the fourth quarter of 2024 financial results. Qisda mainly focus on information technology, medical, smart business solution, and networking communication. We were established in 1984. We have 40-year history. In the past year, we focused on ESG, and we have gained many awards. In 2023, we have won 12 awards of TCSA and 3 awards of AREA. And we have won 5 consecutive quarters of Asia Best Companies to Work For and 9 awards of TSAA. And our global presence, our manufacturing sites mainly located in Taiwan, China, and Vietnam. And we have more than 200 sales offices worldwide. And we focus on R&D capacity, R&D centers mainly located in Taiwan and China. And we have more than 27,000 employees worldwide, and revenue in 2023 reached 203.6 billion NTD. As to business group performance, IT reached 106.5 billion. This is our original IT business group. And the purple columns are Qisda transformation results, high value-added business, mainly in medical, reached 24.6 billion, enjoy the highest growth among each business group and has 3 categories. First, medical services. We have 2 BenQ medical centers, one located in Nanjing, one located in Suzhou, and we also offer medical managing consulting services, and it also enjoys rapid growth. And we also provide equipment and consumables and dialyzer. Dialyzer, we provide streamlined services from fabrication. We have fabrication site in Taiwan and China, Shanghai, and we also enjoyed many distribution channels, not only in Taiwan, also in China and Southeast Asia. As to BSG, revenue reached 32.7 billion, accounted for 16% in total revenue, which include all the services among all business, IT intelligence partner, OT intelligence partner, and OMO solutions. NCG reached 28.3 billion, accounted for 40% in total revenue. As to other, accounted for 5% in total revenue. It's the performance of BenQ material, functional film, advanced battery materials. Other than the core business group, we also have key investment under equity method, which include Darfon, Nobel Baby, Rapidtech, focus on low Earth orbit, satellite, and Top View, and FVOCI AUO. Let's take a look at financial result of the fourth quarter of 2023. In the fourth quarter, gross margin was 16.2%, exceeding 16% for 3 consecutive quarters, and hit highest in the same period in 20 years. However, revenue was 50.7 billion, down by 10% YOY. QOQ remained flattish or up to 1%. Net income attributable to Qisda reached 0.43 billion, up by 50 million YOY, up by 15%. Decrease on QOQ basis. EPS was 0.22 NTD, up by 0.03 NTD on YOY basis. HVA business's fourth quarter revenue was 24.5 billion, up by 300 million QOQ, up by 1%. Among them, medical revenue grew 6% QOQ. Gross margin, OP income margin, and OP income amount grew on QOQ and YOY basis. For NCG, revenue grew 16% QOQ. As to the OP income margin and OP income amount grew on QOQ basis. However, the decrease on YOY basis is significant. As to BSG, revenue decreased 7% QOQ. Gross margin also on the rise on QOQ and YOY basis. IT business fourth quarter revenue reached 27 billion, up by 400 million QOQ, up by 1%. IT original business revenue increased by 700 million QOQ, up by 3%. As we have said in previous quarters, displays revenue has risen for 3 consecutive quarters and grew on YOY basis as well. The first quarter was the trough, and the revenue and profitability is gradually coming back. As to IT HVA business, revenue decreased by 320 million QOQ, down by 9%. As to the revenue decrease significantly, gross margin also decreased on QOQ basis. As to the whole year highlight, whole year revenue reached 203.6 billion, down by 36.2 billion YOY, down by 15%. Gross margin reached 16.2 compared to 2022 14.4%, up by 1.8 percentage point YOY, hit highest in 20 years. Among the decrease, it is mostly impacted by IT business. IT business revenue was 106.5 billion, down by 35 billion, down by 25%. Impacted by the decrease in demand for IT product, and as we have said before, the market is slowly coming back for IT business. As to HVA business revenue was 101.2 billion, exceeding 100 billion for 2 consecutive years, accounted for 50% of whole year revenue. As to 2022, it was accounted for 45%, and in 2023, it has reached 50%. Among them, medical has enjoyed the greatest growth. Revenue grew 20% YOY. Gross margin, OP income margin, and OP income amount grew on YOY basis. BSG, revenue grew 3% YOY. NCG, it has great decline on a YOY basis, 16%. As the revenue declined significantly, it led to a decline in gross margin and OP income margin. Net income attributable to Qisda decreased around 5.3 billion YOY. It is mainly due to the sales of 100% shares in BankQ Hong Kong Limited in 2022, which contributed a gain of approximately of 5.3 billion NTD and created discrepancy. Cash dividend, 1.2 NTD per share. Payout ratio around 79%. In the past, it was around 40 to 50%. And to release some good news, group entities apply for public listing sequentially, such as Nobel Baby is confirmed to be listed on Type pay exchange on March 8, 2024. Data Image also will be listed on Taiwan Stock Exchange on March 26, 2024. BenQ BM Hong Kong Cayman Corporation. The board resolved on January 18, 2024 to prepare and submit the listing application to Hong Kong Exchange for IPO, and because it is regulated for subsidiary to go public in overseas market, it has to go through extraordinary shareholding meetings. Therefore, we will convene this meeting next week on March 14 to review the decision of this application to Hong Kong Exchange. Let's take a look at the fourth-quarter performance. Revenue reached 50.6 billion. Fourth-quarter revenue exceeded 50 billion, and the best performance located in the second quarter. Compared to the same period in 2022, down by 5.4 billion. However, gross margin reached 16.2%. Compared to the same period in 2022, 15.6, up by 0.6 percentage point. OP income reached 868 million, down by 609 million. Net non-OP income down by 330 million YOY. Profit before tax down by 279 million. Net income attributable to Qisda in the fourth quarter of 2023 compared to the same period in 2022, up by 54 million. EPS 0.22, up by 0.03 NTD. Compared to last quarter, revenue remained flattish, up by 297 million. Gross margin slightly went down by 0.4 percentage points. OP income down by 483 million. Net non-OP income down by 780 million. This is because in the third quarter we enjoyed cash dividends, which created such discrepancy. Net income attributable to Qisda on QoQ basis decreased 776 million. EPS down by 0.39 NTD. Let's take a look at the performance of the whole year. Revenue reached 203.6 billion, down by 36.2 billion, down by 15%. Gross margin hit highest in 20 years, reached 16.2% compared to 2024, 14.4%, up by 1.8 percentage points. Growth amount down by 4%. OP income amount 5.01 billion compared to 2022, down by 0.84 billion, down by 14%. The amount of decrease remained flattish as revenue declined. The significant growth in revenue, however, gross margin increased. That leads to a similar decrease in OP income amounts. OP income margin 2.5%, slightly increased compared to 2022 by 0.1 percentage point. Net non-OP income in 2023 reached 1.3 billion compared to 2022, 10.7 billion, down by 9.46 billion. This is because of the disposal of equity of BenQ Hong Kong Limited. Adding the tax, in 2023, we have less tax expense. Net income attributable to Qisda down by 5.2 billion YOY. EPS down by 2.68 NTD. Consolidated balance sheet highlight. Let's take a look at the data. It remained healthy and no big change in the performance. Total asset reached 188 billion. Cash reached 25.4 billion. Inventory level reached 37.9 billion. Remained flattish on QoQ basis, down by 5.9 billion on YOY basis. Liability ratio 66%, remained flattish on QoQ basis. Some key index in financial ratios: AR turnover, inventory turnover, AP turnover, cash conversion cycle remain around the same. Financial trend demonstrate quarterly trend. We can see that, as we have said, revenue in 2023, in each quarter, revenue reached 50 billion, and the best performance located in the second quarter. Gross margin started from 2023, the third quarter, 14.4, going upward until now, starting from 2023, since the second quarter, over 16%. On the right side, we can take a look at the gross margin. In 2018, it was 12.4. Before that, it locates around 10%. To 2019, 2022, it remained over 14%. Now, 2023, it reached 16.2%. Next, financial trend of the fourth quarter on a YOY basis. Please look at the detailed content on this slide. Although gross margin went up, operating income margin did not increase. And you can see the whole year performance, it remained flattish. This is because of the scope of decline in revenue is significant. However, gross margin is going up. That's why I maintain the slow decline in operating income margin. And in 2024, we will keep persistent in maintaining the performance. Business group revenue trend on quarterly basis. High value added business. As a matter of fact, it locates around above 25 billion in the third and fourth quarter of 2023. It was 24.2 and 24.5 and going upward. Medical, since 2022, the third quarter, 5.5 billion, goes up and has exceeded 6 billion for 3 consecutive quarters. The fourth quarter of 2023, 6.6 billion. BSG remain above around 8 billion, remains stable. NCG, it has huge inflection. This is impacted by clients adjusting inventory level. In 2022, the third quarter, 9.2 billion, and it dropped to around 7 billion. To the third quarter of 2023, it was 5.9 billion and go back to 6.8 billion in the fourth quarter. ITHVA, the drop on the fourth quarter is mainly because of top view was changed to equity method from consolidated subsidiary. The revenue would not be included in the total performance, also impacted by clients in IT business. It's also going through inventory adjustment. IT Original, you can see in 2023, the first quarter, 21.7 billion is going on an upward trend. And we can see that IT business is slowly picking up. Business group growth margin. Let's take a look at the fourth quarter performance. Medical locates around 20 to 25%. AIoT BSG locates in 20 to 25%. NCG 15 to 20%. ITHVA 20 to 25%. IT Original Business 10 to 15%. Before that, it was one-digit performance. Revenue breakdown by business quarterly. The detailed information you may refer to the content on this slide. High value-added business group revenue accounted for 50% is the goal for 2022. And in the fourth quarter of 2022, it has actually exceeded 50%. And in 2023, we have reached 50%. And our new goal is to reach 50% profitability in 2027. That's our next stage goal. Qisda Group's listed company results. influenced by slow demand in 2023, and also inflation and disadvantages and so forth. Please refer to the content on this slide. And of course, some subsidiary created great performance, such as Steva, highest in the same period in 8 years, MetaAge, highest in the same period in 22 years, IDT, highest in the same period in 2 years. In 2024, we will persistent to go back to our normal performance. Hello, investors and friends from Media Press. Good afternoon. I'm Peter Chen. As to our CFO reported to us, Qisda in financial results in 2023, revenue reached 203.6 billion, went down significantly by 15% compared to 2022. EPS in 2022 was 4.2 NTD. It also significantly declined, and we're not satisfied with the result. Last year, this time, we've also highlighted that 2023 is a difficult year. We anticipated that performance in the first half, we might met drought, but we can anticipate a peak season in the second half of the year. But it did not go as we expected. In the second half of 2023, impacted by the industrial portfolio, the revenue and profitability were both challenged. In the first half, revenue reached 102.5 billion. The second half was 101.1 billion. To sum up, 203.6 billion, mainly impacted by IT products. We have went through inventory adjustment 1.5 years prior. And NCG, the first half performance in 2023 was not bad, but in the second half, we have encountered a delayed phenomenon and the inventory level adjustment. The decline was significant. And because we have been challenged by industrial portfolio and industrial computer performance remained flattish, slightly declined, that's why the second half performance was worse than the first half. And this is the main reason for the significant decline in revenue. Although EPS was only 1.5 NTD to return to our stakeholder, our payout ratio also rose to 79%. And we want to return to our stakeholder and to fulfill your expectation as much as we can, and we hope in 2024 we can improve our operational performance to allow revenue and profitability to return to normalcy. This is my brief report. In 2024, we all pay close attention. The overall picture, what would that be? This year, we should be more confident. The first half of 2024, since we have announced for 2 months. Next, in March, we anticipate an obvious comeback in demand. The first quarter is definitely a drought. This is our experience in the past years. And the second quarter, even until the second half of this year, compared to last year, we're confident that it should pick up gradually, quarter by quarter. Both revenue and profitability, we have confidence that our performance this year should be better than in 2023. This is a message that we want to convey, and the anticipation and assumption. that we want to offer. However, there are many factors impacting the first quarter performance. Many product lines meet trough. Although IT business enjoyed a comeback, but the scope is not big enough. And we anticipate in March, we will slowly pick up. And this is the major phenomena in the grand environmental performance. Last year in medical business, it has grown 20% and ranked number 1 among all business group. And I have seen a question raised about the growth ranking among business growth. And the first place is medical. The second place would be AIoT and BSG, growth by 3%, slightly growing. It could have grown more, but in the second half of 2023, the performance was flattish or even decline, leads to a decline in whole year performance. As to branding, and NCG and entire IT business group, although we enjoy slightly picked up in display performance. However, projector as a lagging indicator to the first quarter of this year, from the fourth quarter in 2023, we see the weak demand and we see a significant drop in this product. And we have seen this year monitor quarter by quarter picking up. As to projector, should also come back in the second quarter. Collectively, we're confident that although the first quarter to be the trough, but it should pick up slowly quarter by quarter. And we anticipate the second half performance of this year will be better than the second half of 2023. So to balance the trough of the first quarter of 2024, this is the general picture of 2024. This is my analysis and report. Next, I will hand over to President Joe, also our GM of each business group, to give us detailed analysis and status of each business group. And for the question you have submitted, we will wait until our briefings and answer those questions. Hello, investors. This is Joe Huang. As to economic environment, our chairman had brought us detailed analysis, and I will not further elaborate. This year, we will continue the momentum, and we hope the profitability of in 2027 to exceed 50%. And we want to focus on lean and focused, and we have La Fresh 4-in-1 integration, Meta Age integrating Brainstorm, and BenQ Medical Tech integrating K2, and to expand product distribution, and to anticipate to return to Qisda. Second, data image. As subsidiary equipped economic scope, we should encourage them to go public. And we hope subsidiary to earn diversified fund raising channels to be flourish with Qisda. And CFO has also mentioned data image will be listed on Taiwan Stock Exchange on March 26, 2024. Nobel Baby will be listed on Taipei Exchange on March 8, 2024. BenQ BM Holding Cayman Corp. The board resolved on January 18, 2024 to prepare and submit its listing application to Hong Kong Exchange for IPO. This is the task and goal we proceed this year. As to corporate governance and management, we pay attention to and we value the core concept. We have won more than 30 awards, overseas and in domestic awards. This is how we deliver our high performance in this aspect and gain recognition in Grand Fleet performance. For example, S&P Global CSA score. In over 62 major industries, more than 9,400 companies, only 759 companies could be enrolled. Not only we're enrolled, we also scored 81 and entered the top 5 globally. And also we have won Best Company to Work for in Asia for 5 consecutive years. And also Asia Responsible Enterprise Awards. This represents how much we value ESG and corporate governance. As to each awards on the chart, please refer to the content on the slide. Next, let's have GM of each business group to give us a briefing. First, we have Daniel, GM of ITG. Hello everyone, I'm Daniel She, responsible for ITG. The fourth quarter highlight and the first quarter outlook. Global display market sales is not as good as expected for customer inventory adjustment at the end of the year and requirement adjustment. However, Qisda display sales amounts slightly decreased compared to the previous quarter but grew 16% compared to the same period last year. Looking forward to the first quarter, the global demand for display in the first quarter remained conservative. Despite the Red Sea crisis, our brand customers merely slightly increased manufacturing demands to echo the impact of long time spent on sea freight. However, Qisda display sales volume is expected to maintain the same performance as previous quarter. Next, we have Yu Qing, GM of CIG Business Group. Hello, everyone. I'm Yu Qing Lin, responsible for CIG Business Group. In the last year, fourth quarter, the speed to digest inventory level for projectors and our industrial and commercial field customer is slower than expected. However, we have some good phenomena, which is we started to enjoy some immediate orders in the fourth quarter. Customer in automotive field is to adjust inventory level at the end of last year. Looking forward to the first quarter of 2024, projectors and our industrial and commercial field customers should have reached low inventory level. And we anticipate, although they remain to be conservative, but we anticipate the need to thrive gradually. After last quarter's inventory digestion, automotive customers had recovered their demand momentum and even place additional orders for the fourth quarter inventory level adjustment. Thank you, Daniel and Yu Qing. Next, we have GM of BSG, Michael Lee. Hello, everyone. I'm Michael. The fourth quarter of BSG performance, all-year revenue continued to grow on YOY basis. Among them, MetaEdge maintained positive growth in the fourth quarter on YOY basis. Partner profit in fourth quarter increased on QOQ basis. DFI in the fourth quarter also enjoy an upward trend. A-Wing have moved into black in the fourth quarter. As Pillar has encountered a challenge, their clients are in machine tool and impacted by Japanese yen depreciation and regional war. However, we have reduced the scope of loss in the fourth quarter. The first quarter outlook, we focus on 6 major infrastructures, which include edge to cloud integration, cybersecurity, AI computing, green energy, smart automation, and track transportation. And for the demand remain to be elastic. In short term, customers' inventory adjustment is gradually alleviated quarter by quarter, and our demand should successfully pick up. In organizational integration, MetaEdge, DFI, and partner have gradually completed their investment structure. IT from MetaEdge, OT from DFI, and OMO from partner, we could provide comprehensive services. MetaEdge has increased the stake in grantees. In IT, OT, OMO services, it would become our major growth drivers. Thank you. Thank you, Michael. Next, we will have GM of NCG, April Huang. Hello, everyone. I'm April, GM of NCG Business Group. In the 2024, the fourth quarter is the peak season for SI, and IDT has reached highest performance in the single quarter, and the revenue in 2023 also hit record high. However, impacted by the postponed Taipei Dome project, is to embrace its closeout in the fourth quarter as well. However, NCG Business Group in general in the fourth quarter suffer from customers' inventory level adjustment. The performance went down. However, we do not slow down in pursuing growth. So in synergy-wise, the second half of last year would be our major focus. In order to echo our customers' strategy to move productivity to Vietnam, we integrated 2 plants in China into 1 for pursuing higher efficiency. Other than the fourth quarter project performance, other than Taipei Dome closeout, Alpha Network and Transnet Low Earth Orbit Satellite UT project has also successfully embraced its closeout in the second half, and Alpha Network 5G Smart Factory also embraced its closeout. And we also have other projects such as applying radar to smart bus. And IDT, we have 5G smart golf courts and ESG related collaborative projects. And we believe such projects could lead us to great contribution to future growth. Looking into the first quarter, our development point located in expanding market to reach synergy. Our clients' inventory adjustment should continue for a while, so we anticipate the first quarter revenue should be lower compared to the same period last year. And we want to reduce repetitive investment in the same field. And we want to focus on brand development, channel management, and research and development. We will slowly shift to professional OEMs like parent company Alpha Network to reduce risk in maintaining and operating production line for the great amount of capital invested, and to help Hytron to focus on new market development and enhance operation scope. Thank you. Thank you, April. Next, we will have Harry Yang, GM of Medical Business Group, and he will bring us more detailed as medical business is our core business in our future development. Hello, investors and friends from press media. I am Harry Yang, GM of Medical Business Group. Last year, fourth quarter highlights. In general, we have met record high performance. We have reached 24.6 billion, enjoy a growth of 20%. And hospital enjoy the best performance. Other than hospital, we also have other product line. First, we have medical equipment. In the fourth quarter, we have major breakthrough. We have plants in India. India has 1.5 billion population, and they need to have local assembly plant. Once we break into the market, we could have great improvement in market share. Second, medical ultrasound. It is very outstanding that we are the only company owned MDR certificate in ultrasound. This is a breakthrough for us to muscle into ultrasound market in European Union country. This is also a breakthrough for us to deploy high-end ultrasound market. Third, dialyzer. Except for plants in China, Shanghai, in the fourth quarter, we also participated in centralized procurement. And we have been on the show list. And this will be a major breakthrough for us to break into market share in China. We anticipate to see the result in the second and third quarter. Fourth, Ding Ding Drugstore. We invested in Ding Ding Drugstore, and after that, we began to deploy the development to help internal resource integration. And we also established Ding Ding Virtual Drugstore to combine medical supplies and supplements and hearing aid together with channels to create synergy. This is the focus of the fourth quarter. Look into the first quarter. On March 8th, this Friday, Norbel Baby will be listed on Taipei Exchange on March 8th, 2024. This is a milestone. And this is a breakthrough for us to deploy pharmaceutical channels. And we want to expand the placement to scale up through investment and other aspects. And we hope to utilize Ding Ding Drugstore as the breaking point for planning our pharmaceutical channels. And we begin to have MIC to establish plant in Shanghai, China. In the second quarter, we expect to fabricate. For the investment strategy, we will continue to proceed MAA procedure. And we anticipate more partners to join our medical grant fleet. As you can see in the chart, this is Qisda medical business landscape. On the upper left, we see our medical services. Among them, we have BenQ Medical Center in Nanjing and Suzhou. Also, Guigang Donghui Hospital. We have 3 hospitals in China. This is the medical services we provided. We also provided medical consultancy. This is Concord Tech, responsible for this aspect. For pharmaceutical channel, we have CK Care and Ding Ding Drugstore. In the future, we expect to have more drugstore to join us, and also hearing services. These land in the category of medical services. On the upper right, this is our original strength, medical equipment and consumables, which include surgical equipment, ultrasound, medical display, intraoral scanners, and medical consumables, which include mask and isopropyl alcohol. We have deeply deployed in this aspect. Our medical consumables enjoys 70% in Taiwan market share. For isopropyl alcohol, we also account for 70 to 80% market share in Taiwan. Lower right, hemodialysis, also artificial kidney. We have dialyzer, we have dialysis powder. We perform research and development from scratch. We offer streamlined services. Other than products, we also deployed channel in Shanghai, China. We have a plant there. And we also create channels in India, Thailand, and China. We have local distributors. We offer streamlined services. Lower left, smart healthcare. We have smart hospital and AI digital dentistry and AI health examination. And also, TCI provide genetic test and cell therapy services. So, in general, this is our distribution in medical business group. In the future, we will focus on these 4 aspects to expand the development. We see the trend in the future. Through M&A process, we want to amplify the synergy. This is our overall deployment. In the future, for example, we might have more investment in Southeast Asia and medical consultancy, also pharmaceutical channels, not only CK Care and Ding Ding Drugstore. We anticipate to have more drugstore to join us. We expect in-depth development in these 4 aspects as our future goal. This is my briefing. Thank you. Thank you, Harry. This sums up our briefing. Let's enter Q&A session. This is the financial result and operational highlight of 2023, the 4th quarter. Now we enter Q&A session. Okay, investors and friends from media press, I'm Peter Chen. As to the question we have received, first, I've seen one question regarding our growth margin reached 16.2%. However, our expense rate is relatively high. I want to elaborate on this. Because our grand fleet, we own 200 and more companies, and among them, we have some brand companies, such as Partner, in POS and Kiosk. This is a brand company marketing globally, and BenQ and Hytron and CG. These are brand companies. Also our service entities, such as hospitals. Hospital provide services. And those are the reason why our gross margin increased gradually, but our expense rate is higher than other OEM companies. And also, the PPA generated from M&A process, it is included in the expense. However, PPA is not really high. It is inevitable, but the ratio is not high. And of course, this is part of our expense. And the ranking of each business group, medical, 20% ranking number 1, and BSG, 3% ranked number 2, and networking and IT and brand company, compared to the best performance, it is suffering from a decline, but we anticipate slow pick up. This is the ranking of each business group. And other questions, I want to invite our GM of each business group to answer. As to IT business, in the first half year, could we have possibility to come back in the first year? Should we have Daniel Xie to answer this question? IT product line, take display as for example. In the first half, we met 12 and we do not see evident comeback. For brand company, each product line has different performances. For fair price product line and consuming products compared to high-end market, it is suffering from a low demand. And we anticipate in the first half, we're suffered from slow market. We hope to have better performance. And we also reported earlier, IT product, since the second half of 2023, we have enjoyed gradual picked up. Take display as an example. The speed is not fast, but we can see the trend is coming back. And we hope the second half to accelerate this process. And the second quarter, the deployment for AI, BSG, also known as AIoT, the performance, should we have Michael Lee to answer this question? What is our deployment in AI industry? Thank you for this question. For AI deployment, this is our core business. First, for CSP, we have 3 major clouds. This year, from MetaEdge as distributor, and within 3 major clouds, we enjoy great growth, especially for AI cloud from Microsoft. We can anticipate a great growth. And second, we're also distributors for Dell and Cisco. Dell is strongly promoting commercial and industrial AI application. So we anticipate the scope to go up and become the major growth drivers. Third, our own company, A-Wing and Brainstorm, we manufacture server. And since last year, our client anticipate us to upgrade from cybersecurity server to AI cybersecurity server. We also have seen this growth driver to continue to grow. And fourth, DFI and partner. We do edge computing, and our customer also anticipate us to upgrade to AI edge computing from 30 billion scope. Our client using servers and cloud services, our base is exceeding 10 billion scope. And the major momentum is to assist our original plans and our customer from CSG to server to edge, from the original server to upgrade to AI server. And in the next quarters, we will slowly share the growth trend in this aspect. Okay, in the past years, when we deployed in BSG deployment, we don't do standard server, but for AI cybersecurity server, A-Wing is manufacturing this aspect. And followed by the increasing demand, we also hope to enjoy a great performance. This is what AI industry is focusing on. For DFI, the high-end motherboard. This is the focus of edge computing. And for partner and Aplex Tech in the future. We can also see DFI and AMT collaboration to develop the latest high-performance motherboard. For software, goes without saying, world-leading companies are within the category of meta-age as their distributors. And within this, we hope to assist industry to introduce AI technology. As to precision machinery, as pillar, OT, advanced guideway and bearing, and robot arm, and even robot development, these are to apply AI into IoT. Through total solution, smart hospital, smart shop, this integrated solution. This is why we call this business group as Business Solution Group. In the past years, we have been proactively deploying in AI development. Next question regarding what is our plan in pharmaceutical factory M&A process. To this aspect, we have the principle of medical and pharmaceutical are in the same system. So to invest pharmaceutical factory is reasonable. And to create channels ahead, you can see we have invested in Dinding Drugstore. And on March 8th, we'll also go public. And we anticipate to attract more partners to join our grand fleet. And we hope to perfect our channel in this aspect. Once our channel is completed, we hope to expand our sales deployment and channel, and also to invest in upstream companies. And we will not establish pharmaceutical factories from scratch because that was too difficult. We hope to fully constructed the channel and find reasonable upstream of the source of the medicine. This is a reasonable thinking. Once we have great opportunity for M&A, we will definitely treasure the opportunity in investment through M&A process. Please rest assured, we will not do it from scratch. This is our consistent goals. Once we have seen a golden opportunity, we will treasure it. Next, as to Alpha Network and Qisda, what is the synergy between them? Should we have April, GM of NCG, to answer this question? Hello, everyone. Up to date, Alpha Network and Qisda have many collaborations. For example, A-Wing. We also have physical product collaboration. And you might not know Qisda actually owns module and injection modeling plants for AlphaNet to migrate its production to Vietnam. We can also utilize the knowledge of Qisda in this aspect to assist Alpha Network to establish plants in Vietnam. And also Simula. We also have collaboration with them. And when we invested in Alpha Network, we focus on 5G related market. We hope to enjoy the synergy in this market. As you know, Alpha Network focus on RU. and the market growth is not growing as expected. But as I have shared before, we have seen the growing strength is going better and better. When the 5G technology become mature, we hope to have better synergy. And I want to supplement this. The logic and principle of our grand fleet, not only we focus on physical technology synergy, other than that, we also value how we provide the resource co-sharing platform. For SME, it could be very difficult for them to gain resources. And through the Grand Fleet Group synergy, we hope to provide them with insufficient resources, whether it's tangible or intangible, such as talents or financial assets or corporate governance, and to scale up the economic scope. We hope to improve them to grow greatly and to boost the competitiveness, to upgrade its level, such as material usage. We can collaboratively bargain and negotiate, and to greatly reduce our general cost. This is the value of M&A and the value of establishing a grand fleet. And next question, our growth margin went up. However, our OP income margin went down. Our CFO has brought us more detail. Revenue-wise, in 2023 compared to 2022, dropped by 15%, dropped from 239.8 billion to 203.5 billion. OP income margin grow slightly by 0.1%. This is why when growth margin went up, we did not see OP income margin also went up. This is because of the drop in revenue is significant. It's more than 35 billion on YOY basis. But the ratio did not change. As our revenue driver comes back to the strength, as in 2022, 24 billion, then we can come back to our normalcy. As to medical aspect, dialyzer in production in Shanghai plant, when can we enjoy the yield of the factory? Harry has shared information with us. In the second and the third quarter, we should see the result. The yield would be 40 million dialyzers. In Taiwan, we also have a factory. It can produce 2.2 million per year. The yield in China is 20 times than in Taiwan. The cost structure is better in China than in Taiwan. Also, the team knows well about dialysis channels, and they have deep connection. So this is a crucial year for us to amplify the performance. From the end of last year and the beginning of this year, the government in China has pursued the centralized procurement. So the new plant would enjoy this opportunity And we are on the show list of the centralized procurements. So we look forward to enjoy the fast growth of our new product. As to medical development in India, same as in NCG Business Group, India has 1.5 billion population. And we focus on the domestic demand. The manufacturing environment might not help us to muscle into global supply chain. But when it comes to muscle in domestic market in India, I believe this is the best timing for us to break in. NCG also deploy in this aspect, so as medical group. BenQ Medical Tech, our surgical equipment, enjoyed high market share in India. It used to be manufactured in Taiwan. In the past 20 to 30 years, we enjoy high market share in India. Almost 1/3 medical equipment sold to India through this channel. Through scaling up in local market, by this concept, by this thinking to improve competitiveness more efficiently and to penetrate into domestic demand, we have found local partners to fabricate and provide products. And we want to amplify channels. And we have deep connection with local partners. And we anticipate a fast-growing operation and high market share. For ultrasound, we have invested for over a decade. We've also received great feedback and improvement. In this aspect, we manufacture portable ultrasound. We hope that physicians could have one device for each physicians. And we want to change the pattern of patient has to wait for scanning, and we want to improve the medical diagnosis process to make it more efficient, to increase the prevalence. Whether it's pocket size or tablet size or notebook size, we offer all kinds of ultrasounds. And the scope is going up. We have some OEM partners to offer stable shipment. We are also distributor of some overseas brands such as Isaote and GE. And we have great sales amount in Taiwan and Southeast Asia. So for ultrasound, we anticipate a good market growth. What we do is disruptive innovation instead of high unit price device. We are distributors of overseas companies because we want to complete our channel to make sure that we offer all kinds of products in the product line. So ultrasound, we have invested for a decade because we own the technology. I want to emphasize that in January, we have participated in Healthcare Expo Taiwan, and we have launched QMUX probe. It has utilized AUO semiconductor and panel technology. We have invested in this, and we experienced breakthrough technology-wise. This provides better resolution, cheaper, it's more stable, it has higher yield. We have overturned the traditional way to use probe. And we anticipate a great contribution in this aspect. for ITC business to enter medical business, we hope to see the breakthrough. The two companies had applied 40 to 50 patent certificate worldwide, and we anticipate a great opportunity to enter the market. And we have collaborated with world-leading companies to develop next generation ultrasound probe to bring the disruptive evolution to provide cheaper and better and higher yield products. And due to the limitation of time, I think this would wrap up our answers to all the questions. So far, we have answered all the questions submitted online. Our investor conference has come to an end. Thank you very much for participating our online investor conference of the fourth quarter of 2023. We will upload the videos after the conference. You may disconnect now.